Uh, Hello, traders. Now, if you are a day trader, you definitely want to listen to this. My personal all-time favorite as a day trader time frame for analysis is the 4-hour time frame. Now, different traders have different preferences, but that is basically my personal favorite. The 4-hour time frame gives me an opportunity to be able to see key levels, areas of interest, areas that I'm expecting that the market is either going to react from or go to react to. And that is basically when it comes to price movement. Now, this is specifically meant to be pointed out when the market is opening, during the time when the market is opening. So what am I talking about? Let me just take you direct to the chart so that you can be able to understand what I'm talking about. So let me share my screen here. Let me just share my screen here, and then you're going to be able to see what I'm talking about. All right. So basically, when you're talking about a time in the market where my personal preference is for analysis is the 4-hour time frame, because I'm a day trader. So the 4-hour time frame gives me exactly what I want to see in terms of the points of interest, in terms of everything. And we're going to take an example of gold. So this is gold. We want to see what is happening in the market right now. So this is gold on the 4-hour time frame. If you look at it carefully, you're going to realize that this market was previously on an uptrend, all right? And then there was some kind of a break below, but remember, the break below did not go below our protected low, which is basically this area. This is our protected low. So this is a low that we were looking at, and we were saying if the market breaks below this area, then there's a high possibility the market is going to be on a downtrend. But basically, that is an area that has not been broken. So I have marked the wick, I have marked the body, sorry. But again, for you, you can maybe decide to use the wick or something. But for me, I have marked the body. So that is the low. That was the low that we were looking at. If at all this low was broken, then we would say the market is now on a downtrend. But if you look at it carefully, you're going to realize that this is an area that was a very strong support. Very strong support from previous times. It is an area that the market is playing around from. And then when you look at it also, you're going to realize this is also an area where the market is playing around. It's bouncing back from up and down, up and down. Like this is an area that is of much interest. So when the market breaks above the price of 3,440 and above, or below 3,200, then that means the market is now going to like look for new highs and new lows. But basically, this is an area where we're looking to for the market to currently play around at. So this is an area that when you look at it carefully, you're going to realize that the market has been playing around that particular zone, and you can actually zoom in and zoom out so that you can be able to get a clear picture on that. So when you look at it carefully, you're going to realize that the market has been playing around this zone. So this is only on the 4-hour time frame. So let me just remove this one. So that's our resistance, and this is our support. Again, when you look at it carefully, you're going to realize there was an area that was also an area of interest that was basically around this zone. That was resistance, then it became support, and then from there now you can see the market pushed back, and it has been struggling to come down around this zone, but it is a bit strong, this area. That is why the strength of this area is basically what is making it to fail to break below. So what are we supposed to do? We're supposed to be looking at our interest. We're supposed to be looking at our trades just within this zone, and the 4-hour time frame could look like it's a bit quite small, but when you look at it carefully, you're going to realize it's quite something, especially when you go to a lower time frame, like for example the 15 minutes time frame. So you can see that this is a whole valley, it's a whole thing, it's a whole massive time there. It's a massive item that you can be able to see and know that this market is basically time frame. You're going to realize that it's actually something massive. Look at this. The whole of this is the support and resistance on the 4-hour time frame. So when you get to master the support and resistance on the 4-hour time frame, or the range in which the market is playing around, right? When you talk about the range, we're talking about the patterns that are being formed on the 4-hour time frame. Of course, the market always is going to always make the A, B, and then we're going to have a C and then D all of us right above there. So when you get to find the range in this time frame, it becomes easier for you to know exactly what you're looking at. Exactly what you're looking at. So let's go back to the 4-hour time frame and be able to see what we're looking at currently. So now, this is our area. This is what we are working on. Let me just remove all these, just these 2 lines, so that you can be able to understand what we are currently working on. So right now, this is our leg. This is the leg that we are playing with. We are currently on. This is the leg that we're currently on. That's the leg. And this is what we are working on right now. When you look at it carefully, you're going to realize that the market is trying to go to these areas. It's trying to get to those areas up there. So that is basically why I'm saying this is now the leg that we're playing around with. So all our analysis, all our entry, all our trades is supposed to be geared towards moving to this side of the market, moving to this supply zone, right? That is where we're looking at. So right now you can see that the market is pushing all the way up. So there's a high possibility we're going to see something that is going to, like right now it's forming some kind of a base, right? It's forming some kind of a base, which is actually a range. It's actually ranging within that particular zone. If the market breaks above or breaks below, then we're going to see, we're going to be looking at the market either pushing down to somewhere here and then coming all the way up, or we're going to see it break above. So once it breaks above, it's going to be either there, then down, then all the way up, or whatever it is going to do. The only thing that we know is that the market is currently consolidating, and it's going to consolidate until it gets to the New York, around the New York Open. Then the market is going to choose a direction to go to. So where we are right now, we are on mark time. Around the 15 minutes time frame, you can see the market is really creating those massive highs and lows. Let me show you. On the 15 minutes time frame, you're going to realize that the market is creating higher highs and higher lows within a certain range. There it is. You can see the market is forming some kind of a range, right? And this range, when you look at it carefully, you're going to see it's kind of moving in that direction. We have that, and then we have now this, right? So that is the pattern that is going. This is currently being formed. That's the pattern that is currently being formed on the 15-minute time frame. So we're looking to see a break. We are looking to see a break either above or below. Either way, it's still okay. Whether it breaks below or it breaks above, it is still okay. If it breaks below, we're going to be looking to target this area here. We're going to be looking to target this area. If it breaks above, we're going to be looking to target this area here. We're going to be looking to target this area here. That's going to be now our supply zone. So the 4-hour time frame is going to give you the key levels. Look for support and resistance zones on the 4-hour time frame. Look for rally, base, and rally, or look for rally, base, drop. What am I talking about? Let me just show you here. So if the market is forming the higher highs and higher lows, like it's going up like that, right? So you're supposed to be looking for these areas. These are your supply and demand zone. That's your demand zone. Those are the areas you're supposed to be looking out for, because the market will definitely revisit those areas, especially if a break of structure has been formed. If a break of structure has been formed. So we're going to be looking to this for this market to like revisit these zones. And once it does those visits, then we can definitely look for entries around those zones. Now, if the market is making this rally, sometimes you see the market is going to form a rally, and the opposite of this is also applies. That is now drop, and then like that break of structure happening on the low. That also applies just as one on the same, except that for the fact that it's just the opposite of each other. Then also look out for this rally, base, and then rally. So when you see that, then these are also areas that we're expecting the market is going to revisit before it pushes all the way up. And these are actually going to be your areas of interest for entry. So the market is playing around. Remember, this is the 15 minutes time frame. So if the market breaks above around this area, if it breaks above, then we're going to be targeting our supply zones on the 4-hour time frame. If it breaks below, we're going to be targeting our demand zone on the 4-hour time frame. So that is basically what I wanted to share with you guys. And it's something that I know that is going to really, really assist you to be able to understand what is happening in the market, to be able to see what to do and what not to do, especially when trading as a day trader. So I hope you guys enjoyed that video. Looking forward to the next part of this video. And of course, if you're new to this channel, don't forget to subscribe, like, share, and comment. And let's just vibe. See you on the next one. Bye-bye.